Welcome to Forex Classmate. In this particular tutorial, I would like to take you through a brief outline of one of my own strategies that I use on a day-to-day basis to identify potential trend reversals in the market. It's called the Twin Peak Reversal. For more information on this and other strategies that I use, please take a look at my members area. The strategy has got 4 very simple steps to follow, and if you've seen any of my previous tutorials, you will know that my motto is keep it simple, and by doing just that you will improve your trading ability and understanding of the Forex markets overnight. Remember, the aim of the game is to become a consistent Forex trader, not an overanalyzed and paralyzed trading wreck. So what we're going to be looking for in this particular strategy are these 4 points right here. First of all, we're going to be looking for a trend line break, and then we're going to be looking for a break of what I call the baseline or the last low. Then we're going to be using the Fibonacci tool, and I cannot stress the importance of using and being able to use correctly the Fibonacci tool. It's one of the best tools you will have in any trader's toolbox. Now, in my Classmate membership area, I provide very detailed video tutorials in the correct use of Fibonacci and the relevance of the retracement levels and their subsequent extension or take profit levels. Now, once we've done that, we're going to move on to the entry criteria, and that is the test of the back of the trend line or a Fibonacci retracement level. So if we take a look at this very simple trend, you can see that we are clearly forming higher highs. So we're forming here higher highs, and we're forming higher lows, and therefore we are very clearly in an up bullish trend. And remember, this strategy can be used for bullish trend reversals or bearish trend reversals. In this particular tutorial, I'm simply going to be going over a trend reversal from a bullish trend to a bearish trend. So in this example, as we say, we can see that we are very clearly in an up bullish trend. So what we're looking for is a potential trend reversal, bearish. So the first point that we're going to be looking for, remember, is a break of the trend line. You can clearly see right here that we've got the uptrend line. We've been in a bullish trend, and the trend line has been providing points of reference or points of support, okay? And then we've got the break. So this has given us the first indication that we are potentially going to have a trend reversal in the market. The second point we look for is a break of the baseline or the last low point. And again, this has given us a second indication that potentially what we're going to do is see that trend reversal. Because what we've now done, instead of making or continuing to make higher highs and higher lows, what we're now potentially going to do is we're now going to start creating lower lows and lower highs, because we've broken the baseline, number 1, and we've taken out the baseline, number 2. So we have stopped making higher highs and higher lows. You can see how this particular strategy starts building reasons as to why we are looking at a potential trend reversal in the market. So once we've broken the baseline, what we now need to do is we now need to look for a low point that forms below the baseline. And if we just take a quick look at this diagram right here, when we're looking for a low point, what we need to do is we need to form 2 candles to the right of a low candle, and of course we would have already formed them to the left anyway, purely and simply because we're in a downtrend move, okay? So when we're looking for a low point, and the low point needs to form below the baseline, we're looking for this particular setup right here. We've got a low candle, and then we get 2 candles to the left and 2 candles to the right, forming above this low. And that means that we've got a valid low point or a valid point of reference now forming. Okay, then let's review what's happened so far. First of all, we've got, number 1, a break of the trend line. Number 2, we've got a break of the baseline, and we've formed a low point. Remember, this is your low point right here. We've formed a low point below the baseline. So now what we're looking for is we're looking to draw our Fibonacci's, okay? And we're going to draw the Fibonacci's from the peak, which is the last high point, down to where the low point is now formed. And then we're going to look for our entry point. And the entry point is going to be a test of the back of the trend line or a Fibonacci retracement level. Now, as with any trade, when you're entering a trade, what you must always do, of course, is place your stop. And with this particular strategy, I place my stop 10 pips above the peak or the last high. Now, of course, we've now looked at entering the trade. We've placed our stop, and now what we need to do is we need to consider where we're going to take profit, so our take profit target. As I previously mentioned, the use of Fibonacci and the retracement levels and the corresponding extension levels is extremely powerful. And again, in my classmate level membership, I provide very detailed video tutorials on how to correctly use Fibonacci, and in particular the retracement levels and their extension levels. So, other than using that, how can we take profit? We can also use a very simple risk-reward relationship. So, if we've taken a risk of 30 pips, we're going to be looking for at least a 2-to-1 reward. So, you're risking 30 pips. What you're going to do is you're going to be looking for taking a reward or taking profit at 60 pips. What we can also do is we can look for past major support or resistance and look to take profit prior to past support or resistance areas. This is the most powerful trend reversal strategy available to traders today. So why do I say that? Well, it identifies a convergence of potential reversal factors, not relying on simply gut feeling or one potential reason why the trend may reverse. It is providing specific price action signals and combining tried and tested reversal analysis. Knowing when and where to look for potential trend reversals is essential in your day-to-day trading, the art of price action trading. The use of past support and resistance areas, or of course trend lines or points of reference as I like to call them. This is essential in identifying or being able to identify points of reference where the market will potentially reverse. Thank you very much.